The market starts trading in under an hour from now. Heidi Gooch in Sydney. Let's bring it back here to Hong Kong. And Hong Kong's Regal REIT has reported a profit drop, in fact, of 33% in the first half. Regal is Hong Kong's first real estate investment trust, which is backed by hotel assets. And its CEO, Kai Ringenson, joins me this morning on those numbers. Kai, good morning to you.
Good morning, Susan.
Let's talk about those numbers. Interesting, we saw a 33% drop in first half profit, but interestingly enough, from the numbers, we're seeing rental income holding fairly steady.
Yes, we are a real estate investment trust, and we have leased the hotel operations to an associated company. So we are the hotel-focused real estate investment trust here in Hong Kong. We get fixed base rent, and this one was up for us. So our distributable income is actually up.
Are you going to raise maybe that rental income, considering the economy is looking much healthier now?
Well, we can't raise it just like that, but what it does to us, it sort of evens out the fluctuations, the short-term fluctuations in the hotel market, which we have seen in the last half year. So our distributable income is actually up.
Yeah, what about the hotel business? I mean, it's been tough as of late with the global recession. Then you had H1N1.
Yes,
in fact, there are some pretty dire numbers in terms of
occupancy
rates.
This is a tough year. Yes.
Yeah.
The first quarter was still okay. We had a little bit of growth, particularly because the Chinese economy was growing so much. Excuse me. The second quarter was hit by the H1N swine flu, and that really hurt the hotel business in Hong Kong. But we're seeing that the market is now coming back.
Yeah.
And the swine flu effect seems to be going away. And I think we can recover in tandem with the rest of the economy now.
How are occupancy rates doing now, say in the summer?
Well, in June and July, it was still tough. July was picking up, and now most of our hotels in Hong Kong are still back to sort of the 70s, 80s, and 90%. Well, now it was maybe down to 30, 40, 50 in May. Yes.
Yeah, those are pretty grim numbers, aren't they? But let's talk about your hotels. You have 5 Regals across the Hong Kong and Kowloon territories. 5, and you have some of the, I guess, most numbers of hotel rooms for a hotel group. Are you thinking maybe reducing that number and, I guess, consolidating, having less hotels?
We actually love the hotel business in Hong Kong. We think that medium to long term, this is a very good place to be. It's still under-hoteled. We have good locations. And if you want to have exposure to the property market and at the same time to the tourism market in Hong Kong and China, then to invest in a hotel-focused REIT, we think is a good idea. And we actually intend to grow. We have plans to grow over time, both in mainland China and here in Hong Kong.
Yeah, most of these hotels are about 3 and 4 stars usually.
3, 4, 5 stars.
Yeah,
yes.
3, 4, 5 stars.
So we are actually very strong in the mainland Chinese market.
Let me just ask you about your REIT and your payouts. It's interesting because you're still paying out 90% of the available cash. Is that right?
Correct, because we are a real estate investment trust. We actually have to distribute no less than 90%. And now we're actually distributing 92.4%, so we're distributing a little bit more than we have to.
Why is that necessary? Why distribute more than you have to?
Well,
don't you need to hold cash just to be on the safe side? Well,
a REIT investor is looking for distribution primarily, and that is the most important factor. So we are able to, because we have pretty strong cash position, to distribute a little bit more.
What about safety and, say, building up for more, I guess, for the future?
Yes, we are. We are building up. Our previous policy was to distribute 100%. So now we have actually moderated that, so we are a little bit more flexible, so that we can build up cash.
Yeah. Well, things have changed quite dramatically, haven't they, for the industry since your 2007 IPO? I mean, in terms of doing business now with your REIT, I mean, how have things changed since then for you?
Well, actually, up to the third quarter last year was very, very good. Now it's changing because of the market, the recession. But in terms of the growth of the hotel business and Hong Kong's position in terms of tourism in the sort of the mainland Chinese context, we think that there's a really good potential for continued growth in the medium to long term. So we are preparing for that, and we are investing in our hotels. We are changing restaurant concepts. We're building conference centers, trying to improve our competitive position.
Expansion in the plans?
We are seriously looking at an opportunity here in Hong Kong.
Where in Hong Kong?
I can't tell you.
Oh, come on. Isn't it too early for you to be so protective and hush? Is it in the Hong Kong Central District? How about that? I'll narrow it down for you.
I'm not going to be able to go into more detail, yes.
Okay, well,
but Hong Kong hotel market, we still believe is very strong, and we will continue to invest here.
Okay, so
Sure.
let me just ask you this. For an investor watching, they're thinking, why should I buy into a REIT instead of maybe investing it in physical property itself? What makes it a REIT more attractive? You talked about payouts, but what else?
Well, the REIT allows you to get exposure to the property business, and in our case also the hotel and tourism business, without actually having to bother to manage the property yourself. So you get that income like you own the property, but you have professional managers doing it. We are property people, we are hotel people who understand our business, and we focus on hotels, which allows you to follow the market very easily. Still, you don't have to own the property yourself, but you get the same benefit. Okay,
let me just ask you about earnings going forward. Look, is it going to look better than this 33% drop that we saw in the first half?
Well, the drop was because of a deferred tax charge. So that was really just a reversal of last year we had a tax credit because of the change of the tax rate when it went down to 16%. So now this year we had a tax charge because a deferred tax charge because we actually added 280 rooms to our property in Sha Tin. So we increased the inventory there, and that gives us a tax charge this year.
Okay.
So it's all non-cash.
It's all tax
related.
It's all
non-cash.
Yeah. Well, you know, two things for certain: death and taxes, right?
Pardon me?
Two things for certain in life: that's death and taxes.
Yes,
maybe
that's
not
for sure.
The best,
but you know, these
most morbid thing to bring up so early in the morning.
I agree with you.
Okay. Well, nice seeing you, though, Kai. Thank you for joining us and stopping by today. That's Kai Ringenson, Regal REIT's CEO, joining us here in the Hong Kong studio. Now we end the week with what else? More earnings, of course, and starting off at a profit at China's biggest bank, which is ICBC. Profit was little changed last quarter. It beat the street after it boosted credit as it put aside less money to cover its defaults. ICBC may gain today here in Hong Kong and Shanghai. Its ADRs in the U.S. jumped more than 2% overnight. Meantime, earnings at the world's largest phone company, China Mobile, fell for the first time this millennium. China Mobile said that the pace of new subscriptions has slowed and it's facing more competition. And Hong Kong may be out of recession, but people spent less to talk on the phone this year. Hong Kong's PCCW has 2/3 of Hong Kong's landlines, and its net income fell about 1/3 of 1%. We have more coming up after this break. Former UK Prime Minister Tony Blair talks to Bloomberg's Stephen Engel about politics, the environment, and why China needs to increase its international profile.
This update of today's leading actively traded stocks, brought to you by iShares, the world leader in exchange-traded funds.